about break even on the advanced decline line.
Okay.
But hurricane, little talk about tariffs, and of course concerns about some other things going on, some downgrades in the semiconductor sector, also a big mover here. Just take a look at the sectors here. Oil's over $70 again. That's, of course, on concerns about the hurricane. Energy stocks are moving up nicely here. Metals and mining, a little more optimism maybe on the Canadian trade negotiations going on. Healthcare has been a big mover. Banks sideways for a month. Nothing going on with the banks at all. A little surprising there. And, of course, semiconductors have been down. You heard the guys talking about it. Look at some of these big names today. Lam Research, that's a new low for Lam. Applied Materials, a new low. Goldman downgraded the whole semiconductor capital equipment space today. But Western Digital is at a new low. Semi's in another one of those downtrends that's been going on really for the past several days. Important thing overall, aside from the semiconductor moves down, is the whole situation in the tariffs. Tariffs are the marginal mover of the stock market. JP Morgan's very hard to put a number on how this is going to affect earnings. JP Morgan tried to do it today, and I want to give them a shout out, a very nice effort on their part. They think if you put in the entire panoply of tariffs that are being talked about right now, including the China tariffs, everything, it could knock $8 to $10 off from the S&P 500 earnings. That's a lot. Now, we're talking about, they have $165, $168 for the full year. That could be about 5%. That could be very significant. Again, this is all the tariffs. You throw them all in. They also noted, and I think this is important, the corporate emphasis has been shifting from tax cuts to trade wars. They mentioned that in the recent conference calls, 2/3 of the industrials and the staples brought up tariffs as a potential issue down the road. This is why the market moves on tariff and trade war talks. Shout out to JP Morgan for trying to put a number on a very difficult situation. Elsewhere, we are looking at a couple of interesting IPOs today. Let me just point out NIO. A lot of very bright, shiny Chinese electric cars out front. This is, of course, a big competitor to Tesla. We're waiting for this to open. We don't have any indications, but it priced at the low end of the range there, 160 million shares at $6.26. The price talk was $6.25 to $8.25. Essentially, they raised $1 billion. A bit of a disappointment because there was talk a couple months ago they could raise as much as $2 billion. There's a lesson here. The first lesson is don't try going public in a bear market. The Chinese stock market's down more than 20% this year. That's the first thing. Second is you've got sort of performance issues with Tesla. That's an issue because they're competitors directly, so people look at that. And the Chinese ADRs have performed fairly poorly recently. If you look at one, Huya, which went public just a few months ago, $12 went to $50, then got cut in half all the way to the downside. So Chinese IPOs have performed fairly poorly recently. We do have another one on the NASDAQ today, 111. This is a big China online pharmacy. Hasn't priced yet. We are waiting for it to price, but we were looking at $14 to $16. We'll keep an eye on that. And you saw those very nice pictures of those shiny, bright electric cars. We still do not have an indication on that yet. Carl, back to you.